To keep an organisation on the right track and complying with their own obligations, many will conduct an audit to make sure they stay compliant. But who conducts an audit? And what exactly does an auditor do? In today's video, we will be taking a look at what is an audit, what do auditors do, and reasons an organisation would conduct an audit. Hello and welcome to another KYC Lookup video where we bring you AML related content to help you enhance your knowledge in the fight against money laundering. Before diving into today's video, be sure to subscribe so you don't miss out on any future videos. Oh, and don't forget to leave us a comment with any suggested topics you would like us to cover in the future. So, on to today's video. What is an audit? An audit is an independent and systematic examination of an organisation's financial, operational, or other activities to determine if they conform to established criteria or standards. The purpose of an audit is to provide an objective evaluation of an organisation's operations and financial reporting, and to identify areas where improvements can be made. How do auditors work? Audits are typically conducted by external or internal auditors who are trained to evaluate and test an organisation's financial statements, internal controls, and other aspects of their operations. The scope of an audit can vary depending on the nature and size of the organisation, as well as the objectives of the audit. Auditors work by performing a systematic and independent examination of an organisation's financial statements, internal controls, and other relevant information to determine if they are accurate, complete, and comply with applicable laws and regulations. Here are the general steps that auditors typically follow in their work. Planning. The auditor establishes the scope and objectives of the audit and develops an audit plan that outlines the procedures to be performed. Risk assessment. The auditor assesses the risks associated with the organisation's operations and identifies areas that require further examination. Testing. The auditor collects and evaluates evidence to support the accuracy and completeness of the financial statements and other information being audited. And reporting. The auditor communicates the results of the audit to management, shareholders, and other stakeholders through an audit report, which includes the auditor's opinion on the accuracy and completeness of the financial statements and other information being audited. Auditors use a variety of methods to collect and evaluate evidence during the audit process, including reviewing documents, interviewing personnel, and performing analytic procedures. They also assess the adequacy and effectiveness of an organisation's internal controls to ensure that the financial reporting is reliable and compliant with applicable laws and regulations. It's important to note that auditors are independent and objective, meaning they are not influenced by the organisation being audited and are focused on providing an unbiased evaluation of the information being audited. Reasons an organisation would conduct an audit. There are several reasons why organisations may choose to have an audit performed. Some of the most common reasons include compliance. Organisations may be required by law or regulation to have an audit performed, such as public companies that are required to have annual audits by the Securities and Exchange Commission, SEC, in the United States. Accountability. Audits provide an objective evaluation of the organisation's financial statements, internal controls, and other activities, which can increase transparency and accountability. Risk management. Audits can identify areas of risk in an organisation's operations, allowing management to take action to mitigate these risks. Investor confidence. Audited financial statements can provide investors with greater confidence in an organisation's financial reporting, which can increase investment and access to capital. Internal control improvement. Auditors can identify weaknesses in an organisation's internal controls, which can lead to improvements in efficiency, effectiveness, and risk management. And statutory requirements. Certain business entities are required to get their accounts audited under specific acts or regulations. Overall, audits provide organisations with an independent and objective evaluation of their operations, financial reporting, and internal controls, which can help them improve their performance, manage risk, and increase transparency and accountability. Well-known auditors. There are several well-known audit firms that operate globally and are recognised for their expertise in the field of auditing. Some of the most prominent audit firms include Deloitte, one of the largest accounting and consulting firms in the world. Deloitte provides audit, tax, consulting, and financial advisory service to clients in more than 150 countries. PwC, PricewaterhouseCoopers. PwC is a global network of firms that provides audit, tax, and consulting services to clients in over 150 countries. EY, Ernst & Young. EY is a multinational professional service firm that provides audit, tax, consulting, and advisory services to clients in over 150 countries. KPMG. KPMG is a global network of professional service firms that provides audit, tax, and advisory services to clients in over 150 countries. And Grant Thornton. Grant Thornton is a global accountant and advisory firm that provides audit, tax, and advisory services to clients in over 140 countries. These firms are typically referred to as the Big Five accounting firms and are recognised for their expertise and quality of work in the field of auditing. However, there are also many other audit firms that operate globally and are known for their quality of work in specific regions or industries. Regulations auditors implement. Auditors implement a variety of regulations and standards when performing audits to ensure that their work is consistent, reliable, and of high quality. Some of the key regulations and standards that auditors follow include Generally Accepted Accounting Principles, GAAP. GAAP is a set of accounting standards used in the United States to ensure that financial statements are accurate and complete. International Financial Reporting Standards, IFRS. IFRS is a set of accounting standards used globally to ensure that financial statements are consistent and comparable across different countries. Public Company Accounting Oversight Board, PCAOB. The PCAOB is a non-profit organisation established by the US Congress to oversee audits of public companies in the United States. PCAOB auditing standards provide guidance to auditors on how to conduct audits of public companies. Sarbanes-Oxley Act, SOX. SOX is a US federal law that was enacted in response to financial scandals in the early 2000s. SOX requires public companies to implement internal controls to ensure the accuracy and completeness of financial reporting. International Standards on Auditing, ISA. ISA is a set of auditing standards developed by the International Auditing and Assurance Standards Board, IAASB, that provide guidance to the auditors on how to conduct audits in accordance with international best practices. Auditors must also comply with ethical standards, such as the International Ethics Standards Board for Accountants, IESBA Code of Ethics, which provides guidance on professional behaviour, independence and confidentiality. By following these regulations and standards, auditors ensure that their work is consistent, reliable and of high quality. Well, there you have it. What is an audit, what auditors do, and the reasons an organisation would conduct an audit. Please tell us in the comments section if you think auditors are doing a good job at keeping organisations on track, and other topics you would like us to cover in the future. We have now launched our very own courses for you to take a more in-depth look at a variety of subjects, such as Introduction to AML, Beneficial Ownership, and Customer Risk Rating, for example. So make sure you visit our website for further details and let us help you connect the dots in KYC. Thank you for watching the video, and if you made it this far, don't forget to like and subscribe to watch more amazing videos.